All right, joining me now is McCurrie at Momentum Asset Management. Thank you so much, Wayne. Great to have you on the program. So on the global front, there's quite a lot of drama occurring still. I mean, especially, looking at the Eurozone.
It's the same old. I mean, we've had these dramas in Europe now for, it seems like, forever. But understand the worst is over. I mean, what's new about politicians lying? I mean, this is not new. So they've now come clean and said, listen, we had these couple of other little things we didn't put on our liability side of the balance sheet, and now this is now the true picture. But I mean, don't expect any truly good news. All that's happened so far is that we've had reasonable news out of the US. It's not good news, but it's probably reasonable news there. And Europe's in trouble. But it's not a disaster. In other words, simplistically speaking, there's enough money around for the moment to sort out this problem. My biggest concern is, what's the long-term implication of all of this excess liquidity? I think it's inflation, but that's so far down the track, quite frankly, we don't have to worry about it today. Yeah. There's enough free money to sort out this problem.
Are we creating asset bubbles?
We will eventually. Excess liquidity must create an asset bubble somewhere in the system. Now, whether that's going to be emerging markets, or whether it'll be the Chinese currency, or whether it'll be commodity prices or food prices, I don't know. But it's too early to worry about it now.
So when you see what happened today with the Netherlands and Spain,
yes.
Fiscal indiscipline is what they're calling it, and we know that there's various rules and regulations that all the Eurozone countries are going to have to comply with. It's not even about Greece. What if we have to see more bailouts, more assistance to bigger and greater economies?
You know, it's not dissimilar to when your teenage son comes home drunk for the first time. First time's terrible, but the second and third time's not that bad. So in other words, if someone else comes along, they've already made the political decision that they're going to preserve the euro. So it'll just be one more when it happens. I mean, they've already made the decision. And understand, in a slow economic environment, in fact, you could even argue in a deflationary environment, you can print money virtually limitless without any shorter term impact. Of course, there's a long term impact. But in the shorter term, you can virtually print as much as you want to try and sort this problem out and then deal with the excess money at a later stage.
So alarm bells could be ringing when it comes to Chinese economic growth. We heard the World Bank is revising things down there. And then also Indian growth, 3-year low.
Yeah, but India's, okay, look, it is obviously important, but it's relatively small compared to China. China's the big one. So to me, there's two major worries in the world. One is Chinese growth. Now, the mitigating factor there is that if something does wobble there, the Chinese government has got the ability to reflate. They can cut interest rates, they can inject liquidity. They haven't done that yet. In fact, they've been restricting. They've been tightening up the economy. But lucky enough for us, inflation's falling in China. So there's the risk and the mitigating factor. The other risk is the oil price. If this oil price sustainably goes, it's probably okay. It's probably acceptable to the world's economy at this sort of level. I mean, the world's economy can cope with it. But another $10 on the oil price, we're in serious trouble here.
Absolutely.
We truly are.
We've got Iranian parliamentary elections coming through on Friday. It seems that fear is starting to wane when we say this. We're still sitting at above $120
but
a barrel.
You must remember, okay, we buy Brent crude, so the Brent crude price is important to us. But the difference between WTI, which is an American oil, and Brent is like $25, $30. And this is held up because of various unique things in the countries that produce Brent crude, i.e. the Arab Spring, the Iranian situation, you know, a possible oil fire in Saudi Arabia and oil price goes mad. You know, at this high price of oil, it's quite frankly got to come down. Now, it's quite interesting. Take the US is the biggest consumer of oil by far. And they import about 10 million barrels a day of oil, mainly from Canada, but they import all of this oil. Now, their oil consumption has actually gone down, and the amount of imported oil has fallen from 60% of American oil usage to 40% of American oil use. Now, what this means is people are reacting to a high oil price.
Demand
exactly the same as what happened in the 70s. So eventually, a higher oil price will be its own demise. It just might take a long time. But in the shorter term, oil price must stabilize and fall, otherwise we've got trouble.